Thanks for stopping by, fellow investors and traders. My name is Jeff, and in today's video, I want to talk about the most common mistake that I see people making in the stock market right now, okay? Now again, there is a lot of videos, there's a lot of published articles already in circulation, and you're gonna find pretty much the same kind of things on most of these lists. This video here, guys, this is very specific to my level of research, and I'm basing that on a lot of the comments I get here on YouTube, and I'm also basing it on a lot of public forums. For example, like Facebook stock trading groups. When I go through some of these groups, and you will see people posting their portfolios, which, you know, I really don't suggest doing that. And so about 2 months ago, I started taking notes. I started kind of keeping track of this. I'm going to go through a couple of common mistakes I see people make. But at the end of the video, I'm going to talk about the most common mistake I see people making that's really limiting their returns here in 2019. Again, let me preface this by saying I am not aiming this at anybody, okay? This is a video simply for all of us to do some self-observation. I'll be the first person to raise my hand and openly admit I have made every mistake imaginable in the stock market. You know, I've been trading and investing for 19 years now. So pretty much if you name a mistake, I have done it probably 15 times. And as a matter of fact, I'll even share this. I made a silly mistake this morning in pre-market. Hey, we all make mistakes. So do not take this video personally. Like I said, this is simply just for self-observation. While you're watching this video, kind of going over some of these mistakes, take a moment and visualize. Do you fit some of these parameters? And then it will probably be a good idea if I make a part 2 to this video stating some of the solutions to some of these problems, okay? This video, I'm really just going to focus on the big mistakes I see people making. So you all know what to do, guys. Make sure to drop a thumbs up on this video. I appreciate all the support, and make sure to subscribe to the channel if you have not done so already. So again, guys, I'm going to save what I feel is the most common and biggest mistake. I'm going to save it for very last. But the first one I want to talk about is FOMO. That's right, the fear of missing out, okay? And we have all done this. I'm sure everybody that is watching this video that is an active trader is guilty of this. I'm personally guilty of this. It's basically where you see a stock running in a parabolic pattern, and it's just trading up day after day after day. And on Monday, it's $20. By Tuesday, it's $30. And by the end of the week, it's $40. And then you log back in the next Monday, it's trading at 50, and then it hits 60. And then that day comes where you decide, you know what? I'm gonna buy some stock in this company at $70, and just as soon as you buy it, it tanks down 50%. Like I said, we've all done it. I've done it several times. And the thing about FOMO, guys, as long as you do not use a large sum of money, it is usually just a good lesson to learn, because you basically have two options. You can sell the stock and take your loss, or you can cost average down. That's why I pulled up the 1-year chart for Kronos Group. Kronos Group is a company I know a lot of people got FOMO with, okay? Because in October 30th of 2018, Kron was trading at $6, okay? And then over the next 6 months grew $18 of value. I can remember periods of time where it was going up 15 and 20% in one day. And I recall a lot of people buying into these highs when Kron was over $22 and $23 a share, thinking, you know what? This thing's never gonna find a top. It's gonna keep going. This is a true momentum stock. And unfortunately, since that time has lost about $12 to $13 of share value. So, but I think as investors and traders mature, as they get a little bit more experience, FOMO is a lot less likely to happen. Most of the time, most of us more experienced traders, we know when we spot a parabolic situation, a stock that's trading up massively like this, I'm gonna start looking to short it or buy put options against it. And believe it or not, sometimes FOMO will work. Keep in mind, Roku, you know, Roku has run up from $30 in December, and it traded its way all the way to $170. So if you would have jumped in anywhere there in between, you would have got a pretty nice gain. And another one that comes to mind is Shopify. So sometimes FOMO works, but most of the time you're going to end up holding the bag. All right, so another mistake, guys, I see a lot of investors and traders making is falling in love with a company, okay? Is maybe letting emotional response, or maybe how you feel about a specific company or a specific CEO, or maybe this company is involved in an industry that you believe firmly in. Whatever the case may be, you become emotional about your investment, and it is hardwired in your brain that you are not going to sell that stock. And guys, I'm going to be honest with you, this is a very difficult battle to fight, okay? Sometimes you might be relentlessly loyal to a company, and in that context, loyalty is actually a very good quality, okay? I think it is just built into human beings to be loyal to our sports team, to our favorite restaurant, to people we love, to a certain type of car we like, okay? And so the same kind of just goes maybe when you're investing and trading stocks. You buy into a company, business stream that you firmly believe in, and then, you know, the stock might lose 60 or 70% of the value, and you just have the blinders on, okay? You still love this company, and no matter what happens, you're gonna stay in there and take a loss. There's really two stocks that come to mind when I think about this. First one is General Electric, and the second one would be Tesla, okay? But I'm gonna use GE for an example in this video, just simply because this was a staple of the Dow Jones Industrial Average for over 100 years, and this is what you would call a legacy stock, okay? A conglomerate type company with multiple different business streams. And really, guys, nobody's seen this huge collapse coming, okay? On a major analyst scale, there was not this big call for General Electric stock to take this huge dip, really starting in 2016 and 2017, and is still currently losing a lot of value. I'm sure some of y'all even know there's a very popular channel here on YouTube that has pushed General Electric stock and continue to encourage buying GE stock during this collapse. So the story has not been written to completion yet. General Electric could turn itself back around and be a profitable company and get its share price back someday. But in the meantime, you are taking a heavy amount of loss. And if you really dig into the fundamentals of this company and pay close attention on earnings, you are not investing into the right things. I feel like people that are investing in GE right now are investing emotionally, okay? And the next one, guys, this one is really aimed more at traders rather than investors. You know, being a long-term investor, sometimes we almost hope for a price drop, but a big mistake I do see people making is they don't have a plan. They don't have an exit strategy, okay? They simply just buy a stock and perhaps it goes up 10% and that looks nice. Reflects well on your account balance. Then it goes up 20%, then 25%, and nowhere in there have you set a target to sell this stock, okay? So it is very, very important anytime you're trading to have a set entrance strategy and a set exit strategy, okay? If you buy Okta at $100 a share and you want to gain 5%, you immediately sell your limit order to sell that stock at $105. If you're aiming for 10%, then you would set your limit order for $110. The point here, guys, is to not get greedy and follow your strategy no matter what. There's a lot of times in the past, and I've seen this go both ways so many times, where I will buy a stock, let's say at $20, and it runs up to $22. I get my 10% return and I sell completely out of the position. I'm happy with my 10% trade. And then it goes on to run to $29 or $30. The easy thing to do there, guys, is to kick yourself in the butt because, oh man, I just missed out on a lot of extra money I could have made on that trade. The point is, the person that sticks to their strategy is not going to have a situation like this, okay? Where maybe you could have sold a stock that was trading for $100 a share up around 130 or 140. You had a lot of opportunities to sell Okta into some of these highs where now it's back to $100 a share. And assuming you bought in at 100, you're sitting on a zero gain right now. You don't necessarily have a loss, but you're flirting with a loss, you know, on a stock you had a 40% gain on. So that's a very important thing. There's a big difference between investing and trading, and to be a successful trader, you have to have an exit strategy. Another mistake, guys, I see a lot of people make is being fully invested into the stock market and not leaving yourself any cash in your portfolio to use, okay? So, for example, you invested in Facebook at $200 a share, and now it's traded itself back down to 180. But when you bought into this position, guys, you stuck all of your money, every single penny you have, and perhaps you don't have enough income to contribute to this portfolio. So you've just locked yourself out of making any other trades. And then all of a sudden, another stock you're looking at, maybe GDX, it drops 10%. Well, then it drops another 10%, and it's really, really discounted, and you want shares of that stock. But unfortunately, you haven't left any money in your portfolio. So you are just handcuffed to this one position. And unfortunately, now your portfolio is completely at the mercy of one company. So I will tell you something I started doing about 3.5 years ago, guys, and it has worked like a charm. It is a technique I use, so I always have money in my brokerage account. I always have some level of money. Is that I keep 25% of my portfolio balance always in cash. Just a really quick formula. If I take $100 and I put it in my brokerage account, that means I have 75 to spend and 25 is going to sit there, okay? And so you can scale that up however you want to do it. That's my personal strategy. I know a lot of people that do keep money in their portfolio. They might keep a lot less, maybe 10 or 15%. But keep in mind, this is where a trader and investor like me is going to get a big advantage on somebody, is that we have these situations like back in December where the markets dipped down so low and Facebook was trading at $124. Well, guess what? I have a 25% cash holding. If I want to buy more shares of Facebook, that money is always going to be sitting there. And if I end up having to use some of that 25%, I immediately replenish it when I would normally start contributing to my account. So just look at that 25% cash holding as it's immovable, okay? It's basically an emergency fund if anything crazy was to happen in the stock market. All right, guys, so after talking with many different people over the past 2 months and helping a lot of people coming to the rescue for some people that were in a jam, seeing their portfolios depreciate very rapidly, I have tallied up that this is the most common problem I see people doing in 2019, is that they are investing all of their money into one sector and one sector only. I had such a unique experience with this last night. That's what really inspired me to make this video. I had a person contact me, ask for 30 minutes of my time, and would I look over their portfolio for them and give them some help, give them some pointers. And so I agreed to this, guys. And this person had $19,000 value going into their portfolio on the front side, and in less than 2 months whittled it down to under $14,000. So they sent me some screenshots, and it was all marijuana stocks, okay? And it also looked like they were buying into some highs, and they were trying to cost average down. And of course, a lot of these stocks are continuing to lose value. And this isn't the portfolio right here. It just looked a little something like this. It was all Aurora Cannabis, Afria, Kronos Group, Canopy Growth, Pixis, New Age Beverage, and that kind of thing, okay? Tilray, all the marijuana companies, and they had their money spread across all these. I said, I know exactly what the problem is here, okay? This is one unique experience. I've had many people I've dealt with and talked to. They have all their money invested into one sector. And guys, I just want to really express how unhealthy that is for your portfolio. Everything trades on a rotation. And so, guys, I even want to point out the phenomena that happened this past week, where cloud-based and interactive software stocks took such a massive hit. You probably seen some of these names on there, like the Trade Desk and Okta, Adobe, Alteryx, Dropbox, Paycom Software, Anaplan, Slack, Shopify, Zscaler, Intuit, and 2U. Some of these big, high-flying, high-growth companies, guys, they sold off massively this week, okay? And so, of course, I took this as a very good and unique buying opportunity. But let's say I had all of my money invested into cloud-based stocks and interactive software stocks. I would have just lost probably 10 to 20% of my entire portfolio balance this week alone. In 1 week, I would have got wiped out really hard. And I do own some of these stocks at a lower cost basis. And like I mentioned, I took that opportunity to add to some of those positions. I just really want to stress the importance of being well diversified, owning stocks in every sector, okay? And really, guys, I do think a lot of this was from the marijuana boom last year in 2018, where all the MJ stocks ran up so hard. Of course, we could all go back and look at those charts. You know, Aurora and Canopy, Tilray, Cron, all those stocks ran off and took off so fast and got so powerful. I think there's a lot of people that think, hey, if you get in one high-flying sector, you know, you will easily outperform the market and make tons of money. A lot of people have had success with it. I've had quite a bit of success trading MJ stocks. Some of the things I do leave out in my videos, guys, is I short a lot of these companies and I buy put options against them constantly. Tilray has been a gold mine for put options over the past year. And so I just really want to emphasize that. Another thing too, I will mention this, I see people that only invest in cryptocurrency. They don't invest in stocks or real estate. They don't have savings. They just put all their money in cryptocurrency. And of course, that is a very up and down type of market too. You have to trade that when the going is good. You do have to sell, you know, when crypto is running into those highs. That's the whole idea, you know. It's okay to own some of that cryptocurrency, but I would rather be riding free coins than holding the bag. So that pretty much wraps up the video, guys. Do me a favor, go down to the comment section. Tell me some big mistakes that you see people doing that are really hurting their account balance. But if you guys can think of any other reasons why people are losing so much value, or some of the big mistakes people are making, or share some of your own, I would really love to hear those, guys. Thank you as always for watching the video, and have a great day.